Arcadia Capital is an investment fund formed by entrepreneurs, investors, and computer scientists. What we have developed is a proprietary investment strategy that focuses on returning superior results while assuming far less risk, and also understanding that we are in really a new market paradigm of extreme volatility that will occur more frequently. So our strategy really has two components. To summarize, one is to withstand and the other is to profit. By withstand, I mean we have a core capital portfolio that has a high yield but assumes very little risk. So with all the volatility and uncertainty in the markets, that portfolio continues to perform and has very little variation. The other component, which we call the anti-fragile component, is, to take Nassim Taleb's point, we can profit from that volatility and that uncertainty. And we profit by using our proprietary trading strategy. So whether the market is up or down, we really don't care, but we know that with the right understanding of how markets move, how sectors, securities, commodities, other components, how they move, we can then predict and trade profitably with that uncertainty. But there's a key to that. We only use the yield that we get from our core portfolio to apply to our anti-fragile strategy. So in other words, we never put our portfolio, our core capital, at risk. So while we will trade and profit from volatility, we won't risk capital in order to do that. So to introduce who we are at Arcadia, first and foremost, as entrepreneurs, investors, and computer scientists, we have a rigor, and our fundamental approach is to withstand and profit from volatility that we see. And we want to generate a superior return. That's our target. And we generate that superior return by, one, having a core capital portfolio with very little volatility that produces a high yield relative to the risk. And then the other component is that we use only that yield to apply to our proprietary trading strategy, as well as what we call a black swan strategy, which again, from Nassim Taleb, we look at opportunities where there are violent market swings, and we will profit from that, profit from the volatility with our trading, profit from the volatility with select opportunities as they arise, which again, we're calling a black swan approach. And probably the single most important component to our investment strategy is risk management. Effective risk management means you are a sustainable competitive entity from now on, and especially as an investment company, right? There's so much volatility that we're going to see, so many movements that may be unpredictable, so that momentum, which can do spectacularly well sometimes, look at the ARC ETF and look at cryptocurrency, you may make great returns one year and then lose spectacularly the next year, right? We're not interested in that. And so while there may be strategies that outperform us for a year or two, we think on the long term, which is the game that we are playing, that effective risk management first and foremost means you can be sustainable. And if you're targeting superior returns, those superior returns are far more attractive because they become ultimately generational. And so when we talk about targeting superior risk-adjusted return, again, we focus on risk management. And so we put together a core portfolio that has essentially very little risk. I think our models show that we have essentially the risk of a treasury portfolio, but our yields are much higher. So that's the first component of the superior risk-adjusted return. And then the second component, of course, is applying that yield and only that yield to some of the higher return opportunities with our proprietary trading and also with market opportunities with, we call it the black swan investments. And when we look at our proprietary algorithms, here we look at fundamental price movements, which are determined by supply and demand. Price is determined by supply and demand. It's not determined by social media attention. It's not determined by meme stocks. So we think all that is useless noise. And underneath it, we look at what is impacting price movements. So whether or not there's a debate about crypto having any inherent value or not, well, we don't care. We see supply and demand, and then our algorithms react to that. And that's the same with other, I'll say, very liquid securities where we can enable those trades, whether it's in futures contracts or specific equities or any other form of investment that enables us to profit from the volatility that we will see. When we look at uncertainty in the markets, I mean, obviously we're in an extreme circumstance now, right? We have a war in Ukraine, we have a pandemic, but we're seeing so many multiple effects. The pressure on inflation, inflationary pressure from supply chain disruptions, from commodity availability. We're losing 30% of the world's wheat potentially. We're losing all the fertilizer that goes to grow food elsewhere. So we're seeing energy disrupted. We're seeing a lot of other commodities disrupted. But these are fundamental inputs to an economy. So what is economic growth going to be? What is inflation going to be? And there's a lot of uncertainty about interest rates, et cetera. So understanding there's uncertainty and have the mechanisms to profit from that, that's what matters. We ignore forecasts. We ignore a lot of these sort of pundits that, one of the things that we say is beware of experts, right? And so certainly beware of experts who are talking. And so we look at data, we look at analysis, and we have our algorithms, and that's how we're able to generate a return from uncertainty. So we have an anti-fragile strategy. So the portfolio can withstand and profit from volatility and uncertainty. And that's the key component to our investment strategy. Understanding, first and foremost, the world we are in is very uncertain, very unpredictable. We're not in the business of trying to predict that. We think that's a fool's errand. But we do have strategies that will profit from that. And that is the core to the success that we are targeting with Arcadia. So in summary, it's risk management that enables us to be sustainable. And it's our core capital strategy that enables us to withstand the volatility and unpredictability that we're going to see. And it's that anti-fragile strategy with our proprietary trading and our black swan strategies that enable us to profit and target superior returns while assuming significantly less risk to those returns relative to the market. Arcadia continues to do substantial research and work. We have many articles. I've written a couple of books. We prepare a lot of material, and we do that research, and we are constantly on top of the market, constantly refining our algorithms. It's a very dynamic environment that we are in, and we spend our time to try to understand where we can have the best sustainable competitive advantage, managing risk, withstanding volatility, and then profiting from that volatility and uncertainty.